Hey everyone, in this week's video we are going to cover a little bit about the stock market and make a stock market forecast for next week. In today's video we're going to first cover the Dow Jones. We're going to update you there. We're going to do some analysis on the S&P 500, take a look at the Nasdaq, get an update there, consumer staples, healthcare sector, banking sector analysis, biotech sector, and then we're going to wrap it up with an overall market update. As always, thank you for joining us. So jumping right in, we're going to take a look at the Dow Jones Industrial Average chart first. One of the first things I want to point out is if we look at this stochastic slope, what I'm doing here is I'm highlighting with these yellow circles recent highs. These also correlate with recent highs in the stochastic slope. First thing I notice on the Dow Jones Industrial Average is that we are hitting another one of those highs. So recently when we've seen these highs put in and the stochastic slope was at an overbought level, that was followed by a pullback or a move lower in the market. So currently where we are sitting on the weekly chart of the Dow Jones Industrial Average, we're sitting at an area of about 90.60 on the stochastic slope, which would indicate that the next likely direction would be to the downside. Let's add to that there's a resistance line overhead. So previously, when we've hit this resistance area just below, just a little bit shy of 27,000 on the Dow Jones, we made a pullback. So if you combine that with the fact that we are seeing an overbought situation here on the stochastic slope, it makes the future look pretty bearish. Now here, if you look at the bottom quadrant on the screen, this is our histogram for our MACD. Alright, the actual MACD oscillating lines are not here on this chart. I didn't want that to be a distraction. What we can see is we can see a weakening histogram, which is another bearish sign here on the MACD. It's on the Dow Jones Industrial Average MACD, I should say. Last thing I want to point out is that typically on moves, what we can see is that at the beginning of the move, our candle body typically is the largest at the beginning of the move, and as the move goes forward, as the move progresses, here we can see the move progressing, the candles tend to get a little bit smaller. Here at the very end of this move, we can see these candles getting smaller, followed by a spinning top candle, and then this led to a little bit of a blip to the downside, and then a little bit more momentum going up to this resistance area. Again, we're starting to see some reversal patterns here, looking at the smaller body on these candles, and some decreasing volume here. If we move over to the SPY, this is what I'll use instead of the S&P 500. We'll use the SPY ETF. I'm going to go ahead and throw those circles back up there. We already know what those mean. Those are recent highs that correlate with the stochastic slope being overbought at that point in time. And those typically are followed by a bearish move to the downside. So that's where we're currently sitting on the SPY right now. The other thing that I want to point out is that this most recent move, or where we currently sit on the SPY of about 289.97, is slightly lower than the previous move, which is slightly higher than the previous move. So what does that mean? That means that this is slightly forming a head and shoulders pattern, which would be a bearish pattern overall on the weekly chart of the SPY. Let's add to that this recent up move is experiencing some weakened volume. So on the second quadrant here on the screen, you can see that's a volume measure, and so if the volume is weakening and while it's corresponding to an up move, that's showing that the up move is probably losing steam and getting weaker, which would indicate that the next move would be, yes, you guessed it, to the downside. I'm not trying to be Mr. Bear here today. I don't want to be bearish. I'm trying to stay as market neutral as I possibly can, but want to share with you as objectively as I can what I'm seeing in the markets. Hey, if you like this content or any other content on this channel, please consider subscribing. It's very helpful. We're trying to grow this channel, and we want to create content that you want to see. So give us a like and leave us a comment about the types of content that you'd like to see. Alright, back into the analysis. If we take a look at the QQQ, I'm going to use this in place of the Nasdaq. First thing I want to highlight is that this was the high of 2018. So around the beginning of October of 2018, we placed a high in the QQQ Trust, which I'm using interchangeably with the Nasdaq. Since then, we've not been able to break that high. But if we draw a horizontal line, this will be our resistance line, you can see that we are very, very close to approaching an area that was unable to be broken back in 2018. So that's the first thing that jumps out at me here on this chart. The next thing that I want to show is that this is a previous high in the price of the QQQ. Now let's take a look at the current high. So the previous high will be marked with the yellow arrows, and the current high is marked with the blue arrows. All right. What you're seeing here is a classic bearish divergence, or a potential bearish divergence. And what this simply is the price action placing a new high relative to a previous high. Take a look at the blue and the yellow arrows at the very top. But our stochastic slow is unable to place a new high relative to the previous high. See how that indicator is actually lower? The blue arrow is lower than the yellow arrow. What this is showing is that the indicator is disagreeing with the price action, and ultimately that is a very bearish sign. Lastly, I'm going to circle the histogram going from positive to negative, which again, I know I sound like a broken record, is a bearish signal. Looking at the consumer staples, we're going to jump right in here. We already know what these circles mean. Yep, we're putting in an overbought area, and we are actually looking at a lower high than the previous high. So this would actually be a downtrend if we were to reverse at this point right here. Let's add to that this up move is losing steam on its volume. The volume is getting lower and lower, which means that we are probably coming to the end of this move. And yeah, you guessed it. It's not looking too good for any upside potential in the future. Healthcare. Let's take a look at healthcare. What can we get from this chart? This is a little bit different because we're looking at a daily chart here on healthcare. I'm pulling up the XLV. This is the S&P Select Healthcare Spider Fund. There's a resistance area right here shy of 94. You can see that the resistance area was hit back in October. Again in November of 2018. The price broke above that, then fell below it at the end of the year. The recent bullish move in the market was able to retest this area in late February, but unable to break it. And since then, we've been kind of going sideways. Recently, we crossed lower on our MACD histogram, but one thing that I can't help but see is that this price has been channeling. We're up and down between this area of about 89 and 93, somewhere between, maybe 88.50, but 89 and 93 were unable to break out of this corridor, this channel. So before I would contemplate actually trading this to the downside, buying puts or shorting anything to do in the healthcare sector, I would want to see a break of that 89 area. Regional banks. There's an old saying on Wall Street that says, "So goes the financials, so goes the market." Well, it is very prudent of us to take a look at the financials as a potential leading indicator. First thing that I see that jumps off of the screen at me is a downtrend, a very obvious downtrend if you ask me. I'm going to go ahead and highlight some recent highs. So you can see that recent high right there. It's actually a bearish divergence if you pay attention to the fact that that high right there circled in yellow is higher than a previous high, and that stochastic slow was unable to break its previous high levels. That's a bearish divergence that led to a down move there starting at the end of February. But what I want to point out is that if we mark that as our recent high in stock price, or I should say ETF price because we're looking at an ETF, right now at where our indicator is overbought once again, we're putting in a lower high that is currently unable to break through this downtrend line that's been going on since really about August of last year. So that's something that jumps out at me. We had an attempt at some higher volume here on this up move, but we're still unable to break through that downtrend line. And right now, overall, the trend has been decreasing on the amount of volume that we see. And we see this also, lastly, on the histogram. The histogram is weakening on our MACD, which is signaling the fact that the MACD probably wants to cross to the downside, which would be, bearish. All right, lastly, let's take a look at the S&P Biotech industry. This is the XBI. We're going to look at the weekly chart. Not a whole lot here other than the fact that, yeah, we are overbought on our stochastic slow and the price is lower relative to previous highs. So this is a type of bearish looking chart. We're seeing declines in our volume overall, and we're seeing a declining MACD histogram very close to crossing to the downside. Last time we crossed the downside, that led to a move. This is a weekly chart, but that last downside move led from, decline all the way from August into around, Christmas Eve, whenever the market finally took a turn back to the upside. That was a long move to the downside. We're getting very close to that now. Again, guys, if you're watching this and you like our content, then please subscribe. That really helps motivate us to create new content, and leave us a thumbs up and a comment letting us know what you want to see on this channel. So the overall market analysis, this is where I'm at. I'm looking at the whole story. In my opinion, and this is my opinion, this never constitutes as advice or anything like that, but in my opinion, based on all that we're seeing in the overall market indices as well as the sectors, I'm only seeing about a 15% likelihood that the market rises in the next week or two. However, I'm seeing about an 85% chance that there's a down move likely in the market. So the likelihood of a market fall in the next week or two, leading in the next week. Remember, markets, I do believe, are closed this Friday because of Good Friday. So it's a little bit of shortened trading week this week. But I'm looking to position myself to capitalize on down moves. What does that mean? That means buying weekly put options. That means buying put options that expire out a month from now, just to give myself a little bit more time. That also means shorting potential ETFs, ETFs based on stock indices, and ETFs based on sectors that I see falling, so I'm able to short those as well. So that's what I'm looking at here. I would be shocked if we had a move higher. If we did have a move higher, I would expect it to end in a bearish divergence type of situation where the indicators did not follow the price, and then ultimately we would move to the downside sometime next week. There's always the chance that a market can surprise you. We're only dealing with probabilities at best at the end of the day. But overall, using technical analysis and all that I can garner from the information available to me, it looks like there's a much greater chance that the market moves to the downside than to the upside. All right. Thanks again for taking a look at this video and for listening to me blabber on for 12 minutes now. If you've made it this far, give us a like, subscribe, maybe even share this. So thank you guys. Hope you have a good week.